Got it.
Good afternoon. My name is Alan McCoy. I'm Director of Startup Support at UM Ventures at the University of Maryland. And I'm very happy to welcome today Claire Broido Johnson, who is Managing Director of Momentum Fund. So Claire agreed to join us today to talk about the how investors go through the process of making decision to invest or not invest in a company. And Claire is currently doing it as Managing Director of the Momentum Fund. Welcome, Claire. Would you like to tell us a bit about Momentum Fund and about your background as well? And then we will open floor to questions from the audience. We'll go from there. Thank you.
Super. Thanks, Ala, very much for organizing. And I see there's 10 of you on right now and hoping lots more people will be joining. Glad that you're all here today. So my name is Claire Broido Johnson. I'm going to tell you a little bit about the Maryland Momentum Fund first, and then I will tell you a little bit more about myself, and then we'll jump into what investors are looking for when they consider investments in early stage startups. So the Maryland Momentum Fund is a fund that was started in 2017. We started making investments in 2017 in companies that are loosely affiliated with the University System of Maryland. I will put the website here. So our requirements are that your company be based in Maryland and that you meet one of three criteria. One, that the founder is a professor, student, or alum from the university system from any of the 12 schools. Two, that there is IP from one of the 12 universities. Or three, that your company rents space from one of the 12 facilities, universities. And so you only need to meet one of those criteria. And if you go to momentum.usmd.edu, you can figure out our eligibility criteria. It's on our first, it's on the first click down. So we typically invest $250,000 to $500,000 in early stage startups. As I said, loosely affiliated with the university system. We are technology agnostic, so we've invested in therapeutics and aquaculture and education technology and everything in between. Most of our investments are in the seed stage. We've invested in pre-seed, we've invested in Series A. The goal of the fund is twofold. One is to invest in companies so that we can make money and then invest in more companies. And two is to develop the entrepreneurial ecosystem in Maryland. As for my background, I have been a serial entrepreneur most of my career in the clean energy space. And so moved to Baltimore in 2002 after business school, after working at Enron on their first wind turbine investments. I worked at Constellation for a bit, then founded a company called Sun Edison, which became the world's largest solar services provider in the late 2010s, or 2000, so 08 to 12, basically. I spent a couple of years at the federal government, at the Department of Energy, where I was responsible for deploying a bunch of the stimulus package. And then from 2011 to 2019, really was on planes going back and forth to Boston and Silicon Valley, starting up companies in the clean energy, energy efficiency, renewable energy space, because there is not a lot going on here in Maryland compared to what's going on in Silicon Valley or Boston. That is changing now a bit, and I am happy to share more if you're interested. I pivoted a couple years ago, mid-2019, and I now run the Maryland Momentum Fund. And I did that for a couple reasons. One, because I wanted to give back to my community. I've lived in Maryland, since 2002, and wanted to support early stage startups in Maryland. And two, I feel like there is a growing, vibrant ecosystem here for entrepreneurs, and not only wanted to give back to those individual companies, but wanted to help supporting the growth of the ecosystem broadly. So since I joined the Maryland Momentum Fund, I have made 26 investments, so on the order of about one a month, and we are always looking for more companies to invest in. We're especially looking for companies founded by underrepresented founders. Would love to find and support more companies of all different types and from all different schools. So what I would like to do is spend a little bit of time talking about what investors look for and what needs to be in an investment stack. So I'm actually going to share my screen if Allah has given me that capability. 1 second. Who can share? Only hostile panelists. Okay. Let's see if
Should
I
be
have
able to, your co-host.
Yep, here we go. Okay. So let me spend just a minute talking about what should be in an intro pitch deck. Thank you, Allah. So first off, you should include your overview or problem solved. So, X company is bringing in Y years of experience doing A, B, and C to build something, right? So your first slide should not be, this industry is huge. That needs to be in your deck, but the very first thing is to be about why is your widget, your product, your service important? What problem are you solving? And very specifically, why are you particularly suited to solve that problem? Then you do need one slide on the market. It's a huge market. It's a $1 market. Everybody has slides on, how big this market is. I want to really suggest that you don't spend a lot of time talking about the market size. One slide is usually great. Almost every one of the 200+ companies I have reviewed, if they are early stage, spends too much time talking about the size of the market. And that typically is an indication that there is not enough of a company there to review. So it's wonderful that you have a big market and that you think you're solving a problem that's really important, but you only need one slide to do that. The next thing you need to talk about is market traction. So how many projects have you installed? How many services have you offered? What are you doing in the space? If you are not at the point where you have customers, have you gotten a MIPS grant? Have you gotten an SBIR grant? Have you gotten any other non-dilutive grant funding? What are you doing that shows that people care about the problem that you say you're solving? The next is partners. A slide about your partners. Who are you partnering with? It might be the University of Maryland. It might be somebody else. Who is giving you credibility? Who trusts in you and believes in you and thinks that you should be doing what you're doing? A next slide is really a company timeline, literally a left to right timeline of what you've done, what you're going to do. And I'm going to show you a quick example. This is an example from a while ago from a company which shows, what's the company doing? What are the technical issues? What are the preclinical issues? What are the regulatory issues? What are the funding issues? And doing it by year. That is a really valuable, important thing to share with an investor because it shows how much progress you're making as you're going along. The next thing is management team. So who are you? Why are you here? Why is what you're doing consistent with what you've done before? You definitely want a slide about how much money you've raised to date and something about your use of funds. I'm raising $100,000 so that I can hire a salesperson or spend money on marketing, whatever it is. It has to be really pretty specific and ideally percentages. So we're going to spend 20% of, the money that we're raising to do a business development plan. Who's your competition? And if you believe you have no competition, you're wrong, because competition includes what the status quo is. So, without your product and service, the world continues to turn. What is it? So what is it that you're producing or thinking about that is quicker, better, faster than what the status quo is? And typically, as much as we all like to think as entrepreneurs that we're these incredibly innovative people, there is almost always competition with lots of things today. The next thing is risks. And again, if you think you don't have any risks, you haven't thought enough about it. There are always risks and happy to talk more about that. Do you have intellectual property? And if you don't, that's okay, and just state that. But if you do, what is it and where are you in it? And the last thing is exit. So if I'm an investor in your company, what is it that I am investing in? And when will I get my money back? So, I am not as mercenary a VC as many other entities because I'm a part of the university system and I want you all to be successful. But when are we going to get our money back? Are you going to get sold to another big company? What other big company do you think that's going to be? And when do you think it's going to be? So going to stop sharing there. And Ala, as long as it's okay, I think the other thing that I might share is my investment criteria.
Absolutely, that's very important.
Okay, great. And then I'm happy to move along. So let me share my screen with that. With that, I have not made fancy slides, but as a general rule, I'm finding that these are my typical investment criteria. One is market traction. So what are you doing that is showing me as a potential investor that people care about what you're offering? And again, if it's not revenue yet, that's okay. But what, SBIR is investing in you, or you've gotten a nonprofit to give you funding. Excuse me. What is it that's proving to me as an investor that people care about what it is that you're trying to create? And, it's very industry specific. Oftentimes with therapeutics companies, there's not going to be revenues for 8 or 9 years, and that's okay because you've gotten to your pre-IND or you've hit, this milestone. Is there a strong management team? Number 2. And that is coachable. And coachable is really the number one thing that I care about with teams is, are you willing to listen and take feedback, not just from me, but potential partners, from other investors, from your partners, from your channel partners, from everyone. And frankly, that isn't always the case. There are oftentimes founders who are not willing to take advice, and they are not people that I will invest in, or frankly, a lot of other investors will invest in. You have to be able to have a tough skin and be able to take feedback. 3 is an excellent, unique business idea or technology, which kind of goes without saying. It doesn't have to be the only one in the business, but there has to be a really strong, clear rationale for why an investor should want to invest in you. 4, and this is a really important one because it adds a level of accountability, is what are your clear, actionable milestones? And clarity that the past milestones have been hit and that your future milestones will be hit. So I often see, and lots of investors often see, a company that's maybe too early for me now, but I take very close attention to, okay, in 2021, you said you were going to have X clients and have a revenue of $10,000 a year, annual recurring revenue of $10,000 a year. Okay, in 2022, I want to see that you said what you said you did is what you actually did, right? So very clear milestones. If you don't hit those milestones, why have you not hit them? So COVID, as an example, really threw a lot of education technology companies for a loop, because all of a sudden the municipalities didn't have time or attention to spend on buying new technologies that would be really helpful in some school systems, but the school systems were trying to figure out how to deal with COVID as opposed to trying to find new products to buy for their students. That's okay. That means a milestone wasn't hit, but you have to be able to explain what that is and why. And then clear, concise goals, which is pretty consistent with your milestones, but what are the 5 things that you're going to work on in the next 12 months? And frankly, I ask all of my existing portfolio companies the same questions. What are your 5 things that you're going to work on in the next 12 months? You and anybody else on your team should be able to rattle off the exact same answers all the time. And that changes, right? Every quarter, you have to go back and reevaluate. Well, making this green widget wasn't the best idea. We should focus on the blue widget. But being really clear about what your goals is critical. And it's often where I see startups fail, is that they're not clear enough on exactly where they're focusing their time and their efforts. Good partners, which goes hand in hand with market traction. Do you have a channel partner that's helping you sell your product? Do you have a professor that trusts in your product and believes in what you're doing? A clear potential exit. So investors have a hard time when they don't see that there's going to be an exit for 10 years. It's just hard. Are you going to be bought by somebody? What is the long-term goal? And then clarity on the risks and how they're going to be mitigated, that they will be mitigated. And again, if you say you don't have risks, you haven't thought enough about it, because there's always risks. So I actually would love this to be a bit more interactive. And so at this point, I'm going to turn it back to Ala, and hoping that we can get questions and answers from the crowd. I'm also going to post a couple links that might be valuable to you all in terms of perfecting your pitch. let me do that now. And then Ala, I'm going to turn it back to you.
Well, thank you so much, Claire. That was a great introduction. And I found it really interesting that you highlighted that the idea is actually number 3 on your list. The technology is actually number 3 on your list. I'd like to highlight it for everybody.
Yeah.
As at the, at the university, usually a lot of startups are focused on their technology, and their business proposition is number 1. So I just wanted to first highlight that. So thank you for saying that. And so I don't see any questions at the moment. So if anybody has any questions, please submit them, but I'm going to begin. So so I'm a startup. What do I need to approach investors? So what do I need? A pitch deck? What else do I need?
So you need a pitch deck. You need to be able to show your financials. So your cash flow statement, income statement, and balance sheet. And you need to be able to have a really exciting, interesting elevator pitch that you can forward to everyone right away. And that elevator pitch has to be something that everyone on your team can say inside and out. And that's it, really. I mean, ideally, you will have other investors who are already interested in investing in you, because investors tend to, there is some sort of lemming effect that people like to know that other people are investing alongside you. And in fact, that is a rule at the Momentum Fund. So, excuse me, for every dollar that we put in, at least $1 has to come in from another investor. And right now I'm at about a 6.7 to 1 ratio. So for every dollar we invest in one of our startups, $6.7 comes in from another investor. But really all you need is that elevator pitch. And what I often say to early stage startups is, the elevator pitch might be prose and it might be 3 or 4 lines, or it might be 3 bullet points. And there are 3 bullet points that are like really going to grab you, that are going to say, this is why I have to drop everything I'm doing from the 500 emails I'm getting a day. And I really care about responding to this company. And you need a pitch deck and you need your financials.
Yep. And by the way, we will have an elevator pitch workshop in early December with Brent Goldfarb from the business school.
Oh, great. Perfect.
Yeah. So so it is important to have a good one. So hope to see everybody at the elevator pitch workshop as well. So about the pitch deck, how big should my pitch deck be?
Great question. I typically, certainly less than 20 megabytes. I just find it a little rude when people can't figure out how to reduce a PDF to 20 megabytes. I understand that you want to show pretty pictures, but it just becomes annoying. So 20 megabytes or less, and typically 10 to 12 slides that include all of the things that I just shared with you. So let me move up. So, these are the things that should be in an intro deck. And you might need, that's 12 slides. You might need some appendices, but really that's it. And if you need to have more slides about why your market is so fabulous, that's great. But really, there should be only one, and then put the rest in your appendix.
Okay, thank you. So when is the right time to approach investors?
Always and often. So you may be too early for the Momentum Fund, but I want to hear from you anyway. So, we typically like to see market traction, as I've said, but even if you haven't, you should reach out to me anyway, because maybe there is a resource that I can help you with in finding. Maybe you need a new channel partnership and I happen to have a friend who works with a company you need to have access to. I think you should, feel free to reach out to people early and often, especially people like me and TEDCO and a lot of the incubators and accelerators that are around here. For those that aren't familiar, there's something called the Maryland Entrepreneur Hub, which has, let me make sure I send the right link. I'm going to put it in the chat room right now. Early and often is the answer to that question. And do not take the no, I'm not interested now as a no. It just means no, not now. And I'm interested in investing in you potentially in the future. I want to see what progress you make. And if that's what I or any investor says, then really do on a quarterly basis, reach out to everybody and say, this is what we did this last quarter and why it's going so well.
That's great. So where do I find investors?
So it very much depends on your ecosystem and what what industry vertical you're in. But I would check out Maryland Entrepreneur Hub as one. If you are interested, there are lots of incubators and accelerators around that will help you find investors. And then, frankly, like there's an extraordinary amount of web research available. So you're in the sports gaming industry, look up sports gaming investors. You are in the aquaculture industry, look up aquaculture investors. I mean, there's just a plethora of, there's so many investors. Like this is an absolutely beautiful, perfect time to be an entrepreneur. There is so much money going into entrepreneurship right now at every level. And if you are a very early company, I don't know all of you, but I would highly suggest taking a look at TEDCO, which has builder fund money and a variety of other things. I don't know, Alla, if we're allowed to share the Airtable that Lindsay has, but there's so many resources available in Maryland. I would start with the Maryland Entrepreneur Hub.
Yeah, thank you. Thank you. That's great. Do you recommend any platforms like Crunchbase or Gust to find and reach out to individual groups?
Sure. I mean, there's always, you should spend as much time as you can. I do like Crunchbase. There's also PitchBook, and Gust is a very good one. There's also for early stage entrepreneurs that have shown market traction, there's a relatively new group called Gaingels, Gaingels. Okay. And you might check them out as well.
Thank you. Thank you. That has been great. So I just wanted to now dig deeper into the meat of what is it that you're looking for. So one of the things that you mentioned is that the market slide is usually this generic, oh, I have this big market. How can entrepreneurs make that slide actually interesting with the information that would be relevant to what you're looking for?
Sure. So I really like funnels or something that looks a little like a funnel as an explanation. So, I'm in this education technology space. I'm trying to offer after school programming for 7th through 9th grade kids. I'm making this up. That's the top of the funnel. So you say there are X million 7th to 9th grade kids in the United States. That's the very top. And then you say, but we want them to be of Latino descent. And so you're bringing the funnel in, and that's Y million people. And then you're saying, and we want to make sure that they need English as a second language support. So you'd have to figure out then what percentage of those, those 7th to 9th graders of Latino descent actually need ESL language services. And so kind of bring your, then you might have as another level, where can you reach those people? And they are attending, high schools that you have access to or something like that, or grade schools, middle schools you have access to. And that makes the funnel even smaller. And it basically just shows that you've done your homework, that you know that it's not a cajillion-dollar market, that you're going to be able to hit and reach out to a small percentage of that total market.
Yeah, that's a great point, talking about the total addressable market, not just the gajillion.
Yeah.
Right.
Yeah, exactly.
Right. And so thank you. And so now the question is, so how should people talk about risks? Because isn't that risky? I'm going to come and tell you, well, my technology might not work, or, should I tell you these things? Or I think
well, most investors are savvy enough to know anyway. So if you know there's a risk, I probably know there's a risk. And what I care more about the fact that you know it and I know it is, how are you planning on mitigating it? And frankly, I'd much rather you say, I don't know, than, oh, this is no big deal. This technology risk is not a big deal. You're just more realistic and more trustable if you say, yeah, there's technology risk. It's possible that I will not get to stage 3 of completing my technology review. And if that happens, then I'm going to go back and I'm going to do X, Y, and Z to reduce that level of technology risk. So, I mean, I'm not sure if, we need a specific example. I'm happy to take any questions from the audience, but, it's really being as specific as possible. Because if you realize there's a risk, it's silly to say that there aren't any, because a savvy investor will figure that out anyway.
Yeah, thank you. What other kind of risk? So there's technology risk. What other kind of risk are you usually watching out for?
Sure, there's tons, right? There's regulatory risk, there's financial risk. So regulatory risk, you're not going to get the FDA approval you need, or you're not going to get the approval from some sort of accreditation agency. There's financial risk. You're not going to be able to raise the amount of money that you think that you're going to need to be able to raise. There's operational risk. You think that you're going to be able to sell your product through Johnson Controls, and that channel partner ends up not being available to you. There's so many different risks. I think a lot of early stage entrepreneurs underestimate how hard it is to get to a market. So, there's pricing risk, that you're overpricing or underpricing a product. Just Google it. And in each industry vertical, there are different risks. There's risks that you won't be able to find the animals that you need to do testing on. There's risks that, a natural disaster like COVID could come in, and then you're not going to be able to go to Indonesia to finish your aquaculture trials the way that you want to. There's risks that a school system is not going to be able to take the time to review your new, incredibly cool education technology product. But it's often sort of split into operations risk, pricing risk, regulatory risk, technological risk, and then, being honest and fair and saying, I don't have a solution for if this technology doesn't work, and that's why I'm trying to get this funding. And I'm, the way that I've handled this and I'm managing it is I'm getting this non-dilutive funding to help me finish out the research that I need to do, so there's less technology risk.
Yes, yeah, thank you. That was very thorough. So we have a question from the audience. I am a woman-owned company that develops virtual reality content for occupational training. We launched in March 2020. What is the best approach to develop your projections to reassure an investor? It seems like it's a conjuncture.
Yeah, well, unfortunately, so yes, Ellie, projections always are based on assumptions and conjecture. The best way that I, as an investor, thinks about that is, honestly, I look at your assumptions. So virtual reality content for occupational training, I would think through, as you develop your projections, how many people are you going to train? How much time left is it going to take before the training is actually available to be commercialized, to be used? If you're still doing pilot programs, how many pilots do you think you're going to be able to get to? And all of these are assumptions, right? So as many assumptions that you can back up, that's what you need to do. So I would think that your assumptions would include, how many people are you going to be able to train? How many pilots will you be able to perform? At what cost will you be able to offer this service? How quickly will people be able to pay you for this service? Will you have accounts receivable? So, people say they're going to pay you, but they have 80 days or something like that in which to pay you. I would think through, if you're offering it to a number of different, I don't know what occupational training you're talking about, but just nursing organizations, like how many nursing or schools are you offering this to, and what's the percentage likelihood that you're actually going to be able to get a deal with them? So I think if you've got that level of detail on the sales side, that's going to be valuable. And then on the expenses side, hopefully you will have a relatively good idea of what your expenses are. You're paying yourself this, you're paying how much for your office, you're paying how much to develop the content, you're paying how much to do sales. One thing for training, I mean, really for anything, is having a good understanding of what the customer acquisition cost is. So you will be miles ahead of other entities if you have an understanding of how long how long it takes to acquire your customer and how much it costs to acquire your customer. So if it's $500 to acquire each person that you're going to train, I'm throwing that out, and you're only making $520 on each of those customers, maybe not a great business plan. But if it costs you $100, and that includes all of your salespeople, all of your overhead, to acquire an individual customer, and you're making $500 off that customer, that's a really good business.
Yes, thank you. Ellie, I hope that answered your question. If not, please feel free to submit a follow-up.
Someone also asked, are the slides going to be available? They're not really slides. I'm actually just going to put in the chat room the bullet points that I shared with all of you.
Okay, thank you.
Any other questions?
Well, we are waiting for questions. I can just keep asking questions that I usually receive when I work with entrepreneurs. So what is a strong management team? How do you define a strong management team? Can it be, say, a professor working the day job at the university and a student running something on the side? Or what are you looking for in a strong management team?
So ideally, the management team will have founded companies before, or really understands how to run companies, or they have some sort of operational background. So, as you noted earlier in the conversation, Ala, the technology is often less important to me than are you able to execute on the technology. So certainly the technology matters, but when you think about a management team, if it's a professor and a research assistant that has never commercialized anything before, it's not a particularly interesting or valuable entity to us, because there's no, especially if there's not a plan for how to get this to market.
Yeah, thank you. So what should the science team do then?
Well, they should talk to you, Ala, or they should go to a TEDCO or any of the myriad of resources you have available at College Park or wherever their university system is, and try to find somebody that can join them on a part-time basis that has brought companies to operational capability. And there are a lot of resources available. So I would find an entrepreneur in residence, or I would find, through that entrepreneur in residence, or work through I-Corps. Exactly, that's a great suggestion, Jay. There's tons of resources in Maryland to help you figure out how to operationalize, how to get your company from an idea to an actual thing. But I think, having somebody with some sort of operational expertise who has not just sort of invented an idea, but figured out how to sell that idea and offer that idea is really critical.
Yeah, thank you. Thank you. That's really important. Not sure if we have any additional questions for Claire. If not, I can just keep peppering you with questions. So I reach out to you. Will you sign an NDA?
I'm sorry, can you ask it again?
When I reach out to you, will you sign a non-disclosure agreement right away?
Yeah, of course. I think non-disclosure agreements are not as valuable as some people think they are, but of course, I'm always happy to sign an NDA. I would suggest that for any stage company, you put something in your footnotes of your, or certainly your end notes about how, this pitch deck is confidential, and find the right words for that. But no, the intention is I am happy to sign an NDA. I don't think they're particularly valuable, but if it makes you feel more comfortable, that's no problem.
So basically, you're not out there to steal my idea, right?
Not at all. I'm there to make you successful, right? So yeah. And frankly, an idea, as I've sort of intimated, is not worth a whole lot. It's whether you're able to execute on your idea.
Yeah, thank you. And we have a question from David Steele. Do most of your investments come through formal presentations, for example, a pitch, or by building a relationship with you over time?
So I would answer, I don't know if they're called formal presentations, but I invest in most of the companies that I find are incoming. So they email me directly and say, you know, I'm interested in you investing in this company. Here's my pitch deck. Here's my financials. Let's have a call. And so I don't know if that's considered a formal presentation or not. I'm not necessarily finding them through business plan contests or anything like that. I'm literally, it's incoming. It's coming into my email box. I do build relationships with people over time, like Ala and Julie Lenzer and Stan Smith at College Park and Ronnie Gist, who's on the phone. And they will then say, hey, have you looked at company ABC? You should take a look. But I don't necessarily have relationships with people who are just generating ideas. I have relationships with people who are, you know, running the incubators, or like Ronnie running the MIPS program, or running the entrepreneurial support. So, you know, really, again, as I've underscored before, like if you're worried about, do I reach out to an investor or not? Always do. The worst they're going to say is they're not interested now. And there's another question about NDAs. Why are NDAs not as valuable in the past? I'm happy to discuss this, but I don't know if they were ever particularly valuable, in the sense that if somebody really wants to give your intellectual property to somebody else, they're going to do it anyway. I mean, I think if you talk to most, and if somebody really wants to steal your idea and operationalize it, they'll find a way to do it. You know, NDAs are usually 2 to 3 page pieces of paper that, you know, say, I'm not going to share the confidential information you give to me with anyone else. But, you know, depending on the state that you're in, and depending on how, you know, how defined the technology is that you're offering, there's always ways to finagle your way around if you really want to steal somebody's idea. And I know that sounds a little negative. I'm not trying to sound, you know, like somebody who's a super, you know, negative person, but I do think NDAs are honestly not that useful. And of course, if you feel more comfortable, have them signed. But you know, you really should ideally appreciate and respect the person that you're giving the information to, and hope that they're not going to steal in any way.
Thank you. Well, yeah, and generally, investors are not in the business of stealing ideas. Investors are in the business of investing in great ideas.
Yeah.
So, yeah. I mean, this has been great. If anybody has any follow-up questions, please keep submitting them. We've had some great questions so far. And as I mentioned, I will post a video of this session on our YouTube channel so you can watch it again. Here's another question from David. Do you have a spreadsheet with equations where you run the numbers of the companies you're evaluating?
No, I would not say it's quite as objective as that. It really depends on the industry vertical. So compare it using the same spreadsheet for a deep tech company that's trying to detect when forest fires are happening, and you know, fantasy sports football league, there's no comparison. I do run lots of numbers, but it really has to do with looking at your projections, as Ellie had asked about before. I'm looking at your assumptions. Why do you think you're going to get to $20 million of revenue in 2 years? Well, because you think you're going to find, you know, 25,000 people who want to buy your Gidget. How the hell are you going to be able to do that, right? So I mean, I don't have one specific spreadsheet. I certainly look at, you know, revenue multiples in terms of what the valuation of a company is. I look at EBITDA multiples, but you know, a lot of it ends up being rather subjective, and it depends upon where there have been other exits in your field and what other things are worth. The next question is, how do you evaluate the value of a company's IP? Again, very industry specific, but the bottom line has to do with what is that IP going to be able to do? A jet propulsion engine company, who cares about that intellectual property? Who's going to be willing to buy it? And what exactly are you going to do with it? You're going to sell it to UPS, you're going to sell it to Amazon, you're going to sell it to Department of Defense. What are they doing now? And a lot of it really has to do with what's the status quo. So you're creating IP to do something different than exists today. So if people are willing to pay, $45 to do X in an hour, will they be interested in spending $50 to do X in a half hour? The evaluation of a company's IP really depends upon what are you going to do with that IP and how are you going to make money off of that IP. And if you have more specific questions, I'm happy to answer them. I'm not trying to be obtuse. It's really industry dependent. It depends on what the IP is, and it depends on what you're going to do with that IP. And certainly selling your IP at an early stage before you're actually going to operationalize and commercialize it is something that one could do. I mean, the sort of rash answer to it is whatever somebody's worth paying for it. But when I'm looking at it as an investor, I'm looking at what is this IP going to be able to do to make more money, and what's the status quo of the industry, and what are people paying for that now?
And just as a follow-up, how important it is to you that a startup has a strong IP protection?
Obviously, it matters. It depends on what industry vertical you're in. If you're a therapeutics company, you have to go through, all of the FDA approval processes, things like that. I think if you're a software as a service company, it's almost impossible to get IP, so it's not relevant. I think IP is really important when you're trying to sell a quicker, better, faster widget than what exists in the world today. And, for those that aren't aware, and Ala, you probably got some great resources, IP can take a long time to get. And so, going through the patent process and going through the USPTO is really important, and a very important sign to an investor that you're taking yourself seriously and that you understand, going back to the question about milestones and goals, how important that IP is.
Thank you. We have another question from Ellie. What kind of return are you looking for as an investor?
Well, I certainly want to make more money than I invested. So, and oftentimes, and this gets into another set of questions, typically what we do at the Maryland Momentum Fund, because we're early stage investors, is we invest in convertible notes. So a convertible note is basically a loan. I'm basically saying, I'm going to give you $100,000 at a 6% interest rate, and I'm expecting the maturity date to be 2 years from today. And that's basically like I'm charging you 6% interest to get a loan from you, and I want you to pay me back in 2 years. Why am I doing that? Because really, even if you have fabulous IP and you haven't done anything with it yet, your company's not really worth anything. And so, in terms of a kind of return, it really has to do with the timing, and it has to do with when we're investing, and it has to do with, what the risks are. So when I'm investing in a pre-seed company that's pre-revenue, that doesn't have a MIPS grant or an SBIR grant, I'm expecting actually a lot higher returns, because that's a really, really risky company. If I'm investing in a Series A company that already has, $2 million of annual recurring revenue and 7,000 different customers and has a storied business model that makes a lot of sense, and I'm investing at that stage, I'm going to get a lower return, but it's a more likely return. So certainly I want my money back, a one-time return. When you talk about unicorns, you're talking about 100-time returns. I put in $1 and I get $100 back. And I think most humans that aren't in this industry feel like that's what everyone gets, with 100-time return. But in reality, I did a benchmarking study of university funds, specifically not VCs, but university funds. And most university funds have a return of 0.5 to 3 times. So 0.5 means I invested $1 in you and I only got 50 cents back because you're so risky and a lot of companies fail. I obviously would love to get 100-time returns on all of my companies, but the reality is not so. So, practically, if I get 5 times returns on my companies on an average basis, that would be a great deal. I hope that answers that question.
Yes, thank you. And here's another, I think we have another question. Oh, no, that one that just answered. Here's another question. So how long does the fundraising process take? So I approach you today, when am I going to get your check?
If you have the information that I need, which includes your pitch, your elevator pitch, an email that I can forward to everyone else that explains exactly what you're doing, you have your W-9, you are an LLC, you've got, you've created the company, and you can give me your financials. From the first time I talked to you to getting an investment from the Momentum Fund could take 2 months or less. It typically won't take a lot less time. What I find is that often early stage entrepreneurs don't actually have all that information. They haven't finished their W-9. They don't have operating principles. Their financials don't make sense. Their projections are out of whack, and we have to work with them on that. So that's when it becomes a little bit longer. But it could take 2 months. And, typically if you're doing a fundraise, it really depends on how much money you're trying to raise to figure out how long it's going to take and where you are at the stage of your company. It could take 2 months, it could take 6 months, but it's almost always, I would say, entrepreneurs think it takes longer than they would like. So I would say, somewhere between 2 and 6 months.
Yeah. And so is that typical for other investment funds?
Yep.
Yep. Okay.
Yeah, I don't know, Ala, maybe you do. I think TEDCO takes somewhere between 2 and 4 months. Other incubators and accelerators that might have investing dollars could take 2 to 4 months. Going to a Baltimore Angels would take a 2-month time period, or Dingman Angels.
Yeah. And especially for people who are raising a round where multiple groups are contributing, usually everybody's waiting for other people to put money in, so that takes time.
Right.
Yeah. Yeah. So the reason I'm asking this question is because oftentimes I get an email or a phone call from an entrepreneur saying, "Oh, I'm about to run out of money. I need to go raise money, and I'm going to do it next week." So just highlight it. It doesn't happen that often.
No.
That quickly.
No, it does not.
Right. So just to budget for the time and relationship building.
Yep.
Right. And so speaking of that, how important is it to develop relationship with investors, and how would somebody do that?
Sure. So again, I'll reiterate what I said earlier on this call is always reach out to investors. When is the right time to reach out to investors is now. And the worst they're going to say, they might say your idea is terrible and there's no way anybody's going to invest in you. And that's important information to know. And, you should take that to heart. And if you're coachable, you can regroup and figure out what's wrong and how to go back to the drawing board and figure out what might be right. Or they're going to say, you're not ready for me yet, but once you do X, Y, and Z and meet these milestones, then come back. So, I would reach out to investors early and often, as I suggested earlier on this call, every quarter, add the discipline and the accountability where you email everyone that's in your world, your channel partners, the people that you're manufacturing with, the potential entrepreneurs to partner with, potential investors, and say, here's all the stuff we've done in the last 3 months and why we're making so much progress.
Thank you.
Mm-hmm.
Some of your pet peeves, from people reaching out to you and you wish, oh, please stop doing that.
No, I don't find that's my job, right? And that's the job of people in this space, is to be, talking to early stage entrepreneurs
and educate them. Yep.
And educate them. That's right.
Yeah. All right. Yeah. So any other questions from from people in the audience? Well, I found this very, very educational and very informational. So are there any other last words of advice that you'd like to leave us with?
just best of luck. Being an entrepreneur can be a lonely experience, but it can also be really exhilarating. And there's lots of really fabulous things going on in the market and lots and lots of money available now. So, stick with it and stay strong and keep up with your milestones. And I wish you all the best of luck.
Thank you. Thank you so much, Claire.
Thanks, Ala. I appreciate it.
It's been a pleasure. I will follow up with everybody. Thank you to those who joined us as well.
Thank you.
With the link to when the video is posted on YouTube. And I will also share some of the text that Claire shared with us today.
Super. Thanks so much. Take care.
Thank you. Bye-bye.
All right. Bye.